In this video, I'm just gonna go over a little bit about what we're seeing out in the field, out in the trenches, out on the streets, to give you a direct hands-on what's happening in the market right now. Hi, I'm Joe Polyak, local San Francisco Bay Area real estate agent with Rise Homes. Thanks so much for joining me in this video, and let's jump right in. So if you're watching this video, hopefully you've already watched my San Francisco market update and my San Mateo market update where I go over the numbers. I'm an active real estate agent. Our team sells 60 homes per year plus, and we help a lot of people either buying, selling, or investing in real estate. We help a good number of people in the San Francisco Bay Area, in San Mateo County, San Francisco County primarily, but also a little bit in Marin, Alameda, and Santa Clara counties as well. And what I'm seeing in most of the market is a general slowdown. We are seeing that homes are taking a lot longer to sell. We are seeing, though, that inventory is lower, surprisingly. There are a lot less people listing their homes for sale. Why are less people listing their homes for sale? What I'm hearing from a lot of sellers and a lot of agents is that a lot of people have a good amount of equity and just don't really need to sell right now. They have low interest rates, 3% or below, because they've refinanced. If you own your property free and clear, or you have a very low interest rate, there isn't a lot of incentive to sell unless you really need to move somewhere. So a lot of the people that we are seeing selling are people who do need to move somewhere, either for a job transfer or they need a bigger home because they're expecting more members of their family or something along those lines. We're not seeing those buyers and sellers that we would have that were just doing this out of a upgrade in lifestyle or something like that. My team handles a lot of probate and trust sales, so where somebody passed away. Oftentimes there are multiple beneficiaries involved in those kind of sales, so those people have to sell. So I think we are seeing a decrease in the number of sales because so many people are comfortable where they're at with their low interest rate or their home that they own free and clear, that they rather not sell that, buy something else, and then have to buy it at this higher interest rate at 6%, which for the prices that we're talking about, $1.5 to $2 million price points, would be thousands of dollars a month in additional mortgage payments. Hey, if you like this video so far, please help me out. Hit the subscribe button wherever you're watching this video. I really appreciate it. Let's talk a little bit about prices. So average prices overall in the San Francisco Bay Area, they've been trending down. They've been going down. And well, actually, as we saw in the San Mateo County condo townhome market, they've actually gone up a little bit year over year. For the most part, prices are down, but they're not down significantly yet. And my opinion is that the real estate market lags behind the other asset markets by at least a couple of months. So my prediction is that prices will continue trending downward, although at a steadier pace than we've seen with the stock market. We in the San Francisco Bay Area are particularly sensitive to tech stock prices because most of the people here who are working here are employees of Facebook, Google, Apple, Twitter, companies like that. And so a lot of their money and their net worth and their down payment is coming from their RSUs, restricted stock units, or the amount of equity that they get from the company that they work for. Now, recently in the news, we've been hearing, obviously very conspicuously, all the layoffs that are happening in the Valley, in Silicon Valley. So Facebook, Meta recently had major layoffs. Obviously, Twitter had a major round of layoffs.
You're fired. You're fired. You're fired.
If we continue to see that, then we don't know what effect that's going to have on the market. Is that going to dry up a lot of the buyer pool that would otherwise be buying homes? Please let me know what you think about that. What is your prediction? Make sure to drop it in the comments below, or feel free to call me or message me directly. If you want to talk about it, I would love to hear your opinion, and I would love to brainstorm with you on helping you make your next real estate decision as well. We don't really know what's going to happen with these layoffs. Are these people who would have bought homes and would have added to all of the demand that we've been seeing for all of these years? And now that's going to dry up and a lot of these people are going to move to other areas potentially, or are they going to stay in the Valley and just find another job? Obviously, that's unknown. Everybody knows what's happening with interest rates. Interest rates have gone up. Right now, a 30-year fixed mortgage is hovering around the 6% mark. Actually, I spoke with a couple of lenders this morning and it was 5.75 for 20% down payment, 30-year fixed mortgage today. A year ago, it was about 3%. In fact, under. I bought my house in January of 2022, and I was able to secure a 30-year fixed jumbo loan, 20% down payment at 2.75% interest rate. So the difference between those two interest rates translates to thousands of dollars a month. That's very significant. Obviously, that's had a strong effect on prices, although again, I believe that there's a few months lag between what happens in the interest rate and stock markets and then what happens in the real estate market. And there's no way to predict what the Fed is going to continue doing. Obviously, the Fed has committed, and we've been hearing in the news, they've committed to reducing inflation down to the 2 to 3% normal range. And they've committed to that no matter what. And so even if they put us in a recession and potentially a depression,
I'm okay. No, I'm not.
they say they don't care. They need to curb inflation. That's their primary goal. That's what they're focusing on. So what does that mean? Does that mean that interest rates might even get to double digits, 10% and above in a couple of months? I think it's very possible. It's not out of the realm of possibility. And if that happens, what's going to happen to housing prices then? Obviously, they will continue to go down. It could go down fairly significantly. And if those interest rates also affect venture capital funding and all the money that's going into a lot of these tech companies, that could also affect our local economy significantly. That has been just skyrocketing for the last 10, 20 years. Now can be slowed down quite a bit from what the Fed is doing. All of these things are unknown. This is just, me talking out loud and trying to do my best to make sense of the situation, but we really don't know what's going to happen. So if you have any more ideas or you have any thoughts about my take, or you completely disagree, please don't hesitate to drop something in the comments below, or let me know if you are thinking about making a move to either buy or sell a house in the near future. Our team handles a ton of sales in the San Francisco Bay Area, over 60 per year to be exact. We help with full pre-listing preparation work, including fronting costs to sell your property. Please feel free to reach out and let me know if you have any questions. Hey, that's all for today. Thanks so much for sticking around. I really appreciate you watching this video. And if you enjoyed it, don't forget to follow or subscribe wherever you're watching this video. I really appreciate the support. Our channel would really grow a lot with your help. Thank you so much.